Hey everyone, welcome back to the channel. Today we're breaking down one of the biggest revolutions in modern finance, decentralized finance or DeFi. You've probably heard the buzzwords. DeFi will replace banks. DeFi is the future of money. But what does it actually mean? How does it work? And is it really safe to invest in? Stick around, because in this video we'll cover what DeFi is in simple terms, how it works behind the scenes, real-world use cases and risks, whether you should consider DeFi in your portfolio. Let's dive in. What is DeFi? DeFi stands for Decentralized Finance. In short, it's a system of financial services, like lending, borrowing, trading, or saving, but without banks, brokers, or middlemen. Instead of going through a bank, DeFi uses blockchain technology and smart contracts to automate these processes. Example: with a traditional bank, you deposit money, bank lends it out, you earn tiny interest. With DeFi, you deposit into a decentralized lending pool. Your funds are lent out automatically. You earn much higher yields. Think of it as finance run by code, not people. How does it work? At the core of DeFi are smart contracts. These are self-executing programs on blockchains like Ethereum or Solana. Here's how some key functions work. Lending and borrowing. Users can deposit crypto into a protocol like Aave or Compound. Others borrow by posting collateral. Everything is managed automatically by the contract. Decentralized exchanges, DEXs. Platforms like Uniswap let you swap tokens instantly without a broker. Liquidity is provided by other users, not big institutions. Stablecoins. Tokens like USDC or DI mimic the value of the dollar and are the backbone of DeFi. They allow people to transact without volatility. Every transaction is recorded on the blockchain, making it transparent and immutable. Why DeFi matters. So why are people so hyped about DeFi? Accessibility. Anyone with internet access can use DeFi. No bank account needed. Higher returns. Yields on DeFi lending or staking often beat traditional savings accounts. Innovation. Products like yield farming, liquidity mining, and tokenized assets are only possible in DeFi. Control. You hold your own assets in a crypto wallet. No bank can freeze your funds. For people in countries with unstable banking systems, DeFi can be life-changing. The risks, and this is important, DeFi isn't perfect. Smart contract bugs. If the code has a flaw, hackers can exploit it. Billions have already been stolen in DeFi hacks. Volatility. If the crypto market crashes, collateral can be liquidated instantly. Regulation. Governments are still figuring out how to regulate DeFi. Future rules could impact how these platforms operate. Scams and rug pulls. Because anyone can create a DeFi token, bad actors launch fake projects to steal investor funds. So while the opportunities are huge, the risks are just as real. Should you invest? So, should you jump into DeFi? If you're curious, start small. Never risk money you can't afford to lose. Stick to well-known platforms like Aave, Uniswap, or Curve. Consider using stablecoins first to minimize volatility. DeFi isn't about quick riches. It's about learning how the financial system of the future might look. To wrap up, DeFi replaces banks with blockchain and smart contracts. It's open, innovative, and potentially more rewarding. But it comes with real risks, from hacks to regulation. So what do you think? Is DeFi the future of finance or just another hype cycle? Drop your thoughts in the comments, hit the like button, and subscribe for more no BS breakdowns of money, markets, and technology. Thanks for watching, and I'll see you in the next one.